Let me put this on into not disturb. Sure. Yeah, I'm still adjusting something. I'm still adjusting price. I'm still adjusting a price. Yeah, I'm still adjusting a price to somewhat appropriate levels, right? Yeah. So, if you can see there, we price. If you can see there, we price, right? So no, this is an analysis, right? So this is an overall analysis of Gemintate for the past few months. For the past few months, on the direction of it, on where do we think it's going next, right? So we're gonna also include in Fibonacci, right? So we're gonna use Fibonacci mostly. We're gonna use demand zone. So I'm gonna introduce the concept of a demand zone, even though I know that I said I'm gonna stress on a Fibonacci, but I'm gonna stress on a demand zone, right? So no ukuthi these videos like groupini, I'm gonna try to ukuthi ngizama ukuthi egroupini like ngizama uku-understandisa ngesizulu, right? If like kukhona la ungangitholi khona if ngi-explain nge-English, but I'm gonna just explain izinto eziningi nge-English, mostly because ama-concept of i-forex they revolve around English, so esikhathini esiningi. So and the books and everything izinto ezibhalwe nge-English, so kuzoba right mangabe ama-video ngi-explain nge-English, same as mabukela kuma-YouTube, and then you'll know ukuthi, and then mawufika egroupini then you're gonna ask me ukuthi okay lana ngikuthole kahle ukuthi bawuthini, and then I'm gonna try to clarify ukuthi bengikuphi lapha understanding, right? So I'm also gonna try to introduce the concept of demand zone, right? A demand zone, a supply zone, right? So basically supply zone, the area, a supply zone is an area where, like for example, there's this box, right? So a demand zone, it's where basically buyers to control. Alright, so if the market comes back to this box, likely it will go up, right? Inverse to supply. Supply is a price where maybe let's just say this market was coming like this, and then sellers right over here to control. The market maybe might come right here. Maybe the market might come right over here all the way to the downside, right? So yeah, it's something like that. So basically a supply and demand zone is an area where a price was lastly negotiated and there was a decision and price came to a conclusion, right? So a demand zone and supply zone is basically an area where price ikiyaba negotiated, and then go back on conclusion of okay, we conclude with this. So we as buyers we say we say we're gonna take over from here, or we as sellers we say we're gonna take over from here. So if you price a figure like now, chances are we still gonna go back to the same decision, right? Okay, sharp. Let me try to explain this right over here, right? So basically demand zone. Okay, so basically demand zone now, my demand zone. Let me mark my demand zone, right? Let me mark my demand zone. So basically, right, and try to explain my demand zone, right? I don't know, there's a bit of noise over my roof. The birds making noise over my roof, right? The birds are making noise, right? So I'm not gonna mark all of them, right? But I'm just gonna mark areas where price is likely to react my figure go, alright? Areas where price is likely to react my figure go. So these three areas, price is likely to react my figure go, right? What is the reason behind these areas price going to react, right? If you can see here, we had a selling pressure, right? And then when price came to this point right here, to this point kule rate candle, buyers said okay, you know what, we feel like this price has pushed down enough, we can take this price to the upside. We can move this price to the upside. We're willing to buy at this area, we're willing to buy and push this price to the upside, right? And then sellers again came and tried to negotiate price in this area, right? And buyers still said, you know what, because you can see this week it went down, right? The other candles was green, bullish, it was bearish, so there was a bit of a consolidation right over here, right? Price was still being negotiated, and then buyers ended up saying, what, you know what, we're saying we're still gonna push this price where to the upside. And then when they came to this area right here, sellers again try to negotiate this price. They try to enter the market, right? And then as they were trying to enter the market, buyers said, okay, you know what, even though we see that this is the last high, this is the last high, right? Even though we see that this is a nice high, but we're saying, Guti, it is still okay, or we're still willing to ride this trend. Therefore, we're willing to push price where to the upside, right? Where to this high point right over here. So because in this area right here, price was once negotiated, and buyers once view price in this area as the cheapest area to buy, or the favorable area to buy, right? As they previously saw this area as a previous area to buy, right? So they might buy again, right? It is more likely that they might enter again, and they might try to buy and push the price where to the upside, right? So if you can see, Uguti, they tried to push price to the upside in Zabuya Manji. They tried to push. Yeah, sorry for that. Yeah, wait. So if you can see that at this area again, you see what is happening right now. You can see that price is showing some form of rejection. As the market came to this area, price is showing form of what? Of rejection. Buyers are saying, what, we previously saw this area as a favorable area that we are willing to buy, so we might also again buy, right? So you can see that buyers are entering, right? They're trying to push price where to the upside, right? So that is the concept esizosebenza ngayo this week. You're free to engage, go group, and ask questions if you do not understand, but this is the concept that we are introducing. So this concept goes hand in hand with Fibonacci, right? I'm also going to show why and how I'm saying that, right? So it goes hand in hand with Fibonacci, right? Yes, it goes hand in hand with Fibonacci. It goes hand in hand with the trend, right? And it goes hand in hand with finding the discount areas, finding the favorable areas, finding areas where people view price as being in a discount area, that they know that when they buy there, mostly this is stock, right? On stock, we want to buy most of the times, right? So if they see that, okay, this stock has pulled back for this time, so we see this area as a favorable area for us to say we want to buy this market, we want to push this market where back to the upside, right? So they are more likely to enter where on a place where there was once a negotiation and a conclusion was made, same as in this area right over here. If you can see on a monthly, this is a monthly time frame, so keep it note, this is a monthly time frame. So I'm also going to make sense how the monthly time frame is how this monthly time frame, right? So I'm gonna write I'm gonna write MDZ, right? So monthly demand zone, remember that is monthly demand zone, right? So I'm just gonna write MDZ, right? I'm not gonna write the full weight. Okay, right? So okay, right? So now we come to this area, right? We can see that even though here we had sellers, right? We had sellers to this point. I'm gonna show you now. I'm gonna try to make it make sense right over here, right? So even though we had this demand zone right over here, we had this demand zone of a box right over here, right? Even though we had this demand right here, we had this demand right here, right? And we saw it's okay, sellers wanted to push price where to the market, to the downside, right? They were saying, okay, you have pushed, but you have been buying this market from this price, right? So we're saying now you have bought enough, right? So we want to sell, right? So selling pressure was starting to come in, right? Investors were starting to say, okay, you know what, we cool with the profit that we made, right? We want to say we cool with the profit that we made on this trend, so we'll write the second wave, right? So the profit taking, right? There were selling pressures coming in, so now sellers found room, in that profit taking space. They found room and were willing to jump in that opportunity, right? So if you can see that we have this week right over here, which was our weekly lower high, right? Which was our weekly lower high, right? So we had this week right over here breaking below that zone, right, showing that there was selling pressure. Sellers were trying to enter this market, but buyers ended up pushing way to the upside. So I'm gonna use this week right here as what, as my lower high, right? So that was the reason why I was explaining that, so that we all together why I'm saying that is my lower high. So I'm also gonna show you that I mostly use a candlestick strategy, right? But I like to analyze my overall time frame with the more cultural way of analyzing the market, right? So it's a more cultural way of analyzing the market, right? So the more cultural way is where you write your highs, your lows, your support, your resistance, whatever strategy that you're using. So that is the cultural way. And I feel like when it comes to execution, that's where now mostly are likely to use now the strategy that the market has taught you, right? Through what? Through constant repetition, through constant blowing of account, all those things, right? So, but when you analyze on the bigger time frame, most of the times we like to use the cultural time frame, right? So yeah, you're free to engage on WhatsApp and ask questions, right? If I'm moving too fast, right? Sure, if I'm moving too fast, guys, because I feel like there are a lot of our concept that we didn't cover. There are a lot of our concept that we didn't cover, so I'm just trying to cover in the short space that we had, right, before we start go practicing again, and then we come back and try to see the results for a month, right? Sure. So if you can see, right, so I marked my lower high, right, which is this last low right here, right? So I have my higher high, which is right over here before the market reverse, right? So in a monthly time frame, right? So you can see that, okay, I'm having this trend where the market is going nicely to the upside, and you can see that this market has been going to the upside for quite a long time. So it's a bullish market, right? So you want to be with buys more than you want to be with sells, right? Yes. Okay, sure. Right. So we can see that, okay, this is a buying market, right? So now what do you wanna do? Now we wanna check on our Fibonacci, right? So wanna mark our Fibonacci, right? Wanna see the discount area, because we can see that price here was once negotiated, and it's showing proof that buyers, the last time price was there, buyers came to the conclusion that they're gonna push price to the upside, right? So it shows now this candle rejection, this weak rejection on a monthly time frame. It shows that buyers are still saying the same thing, that when price reached to this area, we once came to this conclusion, and we are saying that we are still sticking to this conclusion, that we're still willing to push price where to the upside, right? So that is basically what a supply and the demand zone is. I don't know if I explained it better, but yeah. Right, so if you can see, right, when I mark this high, so I'm gonna mark it properly, right, so I'm gonna mark it where properly, right. Right, I'm gonna mark it properly, right? So we can see that I usually use my 50% and 75%, 75% of my Fibonacci levels, right? So I usually want to see where the price was on 50% discount and on 75% discount. So I usually have two entries, which is my 50 and 75, right? So I'm more keen on entering on 50 if price close above 50 and respect it as a resistant, and I'm more likely to enter around 75 when it does the same thing. But if price close below, the body close below the 50%, I don't like entering such markets, because that shows that nothing has happened. Bears are still in they're still dominating this move, right? So on a higher time frame, right? On a higher time frame, we cannot see it properly, but you can see that is way above our 50% zone, you know. So it's way above our 50% level. So Fibonacci, I use it to understand discount. So basically, Fibonacci, let me go back. I think I had previous videos where I explained Fibonacci. I'm not going to explain it again. Yeah, I have previous videos where I explained Fibonacci's, right? So if Fibonacci, basically, I'm just going to do a summary. The way I use it is to check zones where price move from this low, right, from this low, which is 0%, right, to this high, which is 100% of this bullish move, right? So when price is coming back to the 50% of this bullish move, right, I'm saying that buyers are more likely to enter, right, because now it's at the 50% of this move that they ride previously, right? Same when it comes to 75%, they are more likely to enter, right, because now on 100% of this move they are at the discount of a 75% of this previous move, right? So if they buy here at 75% too much, and then they have this buying pressure to push this price to the 100%, to this high, which is 100% right now currently, right? Yes. So if you can see right now that price is showing somehow signs that it is respecting that 50% Fibonacci and is closing above, right? So let's go over to what, to a weekly time frame. So right, if you go over to a weekly time frame, you can already see that this pattern, they have a pattern, we have what, we have a hammer. What is it a hammer, right? So you can see that it shows that sellers push this price where to the downside, right? To the downside, they push price to the downside, but they failed to actually manage the price to close bearish below the 50% and below the demand zone. So it shows that there was too much buying pressure at that area, that when price arrived at that zone, it was forced to move back where, to the upside, right? So ended up closing with this strong weak rejection. So let me mark it, right? So we have this weekly high right here, weekly lower high, right? So we have this weekly lower high right over here. So this previous weekly higher low, right? And then we have this previous weekly lower low right over here, right? So we have this previous weekly lower low, right? So I have this previous weekly lower low, right? Sharp. So as you can see, we have what, the previous weekly higher low and the previous weekly lower low, and we can see that when you see the body, that the body of the previous week, that the buyers were dominant, right? Because the body of the candle ended up green, right? So it shows that the buyers were dominant, right? And if you can see with this current candle right now that is currently running, you can see that it is rather bullish, right? Showing that the buyers are taking over from the last week pressure, right? Yes, which was a buying pressure, right? Yeah. Let's go over to the daily, right? So it will make sense, right? Yes. So if you can see on a daily time frame, right, I want you to see this big engulfing bullish candle, right? So bear with me now. So you can see this bullish candle, right? You can see that it broke the high of this candle, right? And then it broke the high of this candle right over here, right? Which are my daily candle. I'm just gonna say my lower high, and I'm gonna say my higher low. The reason why I mark this is because I'm a day trader, right? So it will make sense why I use this. I don't use it on a bigger time frame. I'm a day trader, so we're gonna say it, right? So you can see that on a monthly demand zone, we can see that it showed rejection, right? But you can see that this body was rather bearish, right? And then you can see that on the next day, which was Tuesday on the 8th of April, right? It was rather it tried the buyers tried to push the price to the upside, right? But they failed, and then at the end of the day, sellers were dominant, right? And the body of this candle was below the Monday candle body, right? So yeah. So if you can see on a Wednesday, that's where we saw that now buyers were what? Buyers were taking control, right? They're giving us what this lower high right over here. They're giving us what this lower high right over here. So I'm gonna make this blue. So I'm gonna make this blue, right? Just gonna make this blue. All of them. I'm just gonna make them blue. So now it's gonna start to make. So let's go to the 4 hour. So I use candlesticks, right? So we can see that we had this high broken, right? So this we had this high broken, we had again this higher low of a previous daily candle broken, right? Broken, right? We have it broken, right? And then we had this higher high right here, which was our previous weekly high, weekly higher low, right? So we see the market today, right? We can see that okay, the market is rather still. The market showed that it broke all these highs and then it pulled back. So now we mark our Fibonacci. So no, this Fibonacci, this second Fibonacci is the one that we use on the day trade to track price, right? Yes, to check price on the daily time frame, to for us to understand our daily moves and to understand the reason why we took that market, right? Why we took those entries, right? So we can see that this market, right, from here it shot up, broke this higher low, broke this higher low, went all the way up to create a higher high, pulled back, right? So we mark this pullback, right, as our what? We mark our 50% and our 75%, and we can see that price rather reacted to our 50%. So now assuming that price is gonna come here to our 100%, right, and then do maybe something like this and then go all the way up, right? But that is our bigger view, right? Bigger time frame analysis, right? So in a lower time frame, we're just gonna mark what our 50% to understand that okay, we rather aiming for our previous weekly higher low, right? So that we can see that this market, even in a higher time frame, is changing the market, right? Because if you can check, this higher low was a previous daily higher low, the weak rejection, and if you can see the other one, it was also the previous daily higher low, weak rejection, right? High weak rejection. So we can see that the market broke the first one as a change of character, it broke the second one as a higher low POS, right? Showing us that now signs that this market is likely to change, that buyers are starting to come in the market, right? So we can see that with this leg, buyers saw that they were dominant, right? So we want to catch what? A 50% of this move again, right? To enter the market to the upside, right? So we're not swing traders, right? Because if we're swing traders, we would have entered this market such as this. But I want to show you something, the trick of day trading, right? Day trading. So this 50% right over here, this 50% right over here, this 50% right over here would have been a probable area for a swing trader to the upside, right? To the upside, right? To the upside. So this would have been a swing trade. So I'm not so based today. We are not on the swing trade topic. We're still gonna come there. Now we're still on a day trade. The reason why on a day trade is because the day trade tend to offer most of tend to give more opportunity where we can exercise our strategy, basically, because I think it was formulated around day trading. Because you can see the times that we entered, 10:30, all those times, like 4 hours we out of the market, things like that. So yep. So if we can somehow use if we can swing, for now it's gonna be a problem. So let's stick to this, right? So we can see that the price reacted what to rather 50%, right? So now it's going where? To the upside, right? So we see that okay, today the market were opened here, right? So the market opened were here, right? So it opened with this candle, right? So it was bearish, right? It was somehow again bearish at 5:30, right? So this candle closed at 9:30, right? So that is our time of entry, right? So remember that we trade New York session, so we usually check for our entries 9:30 until the one from 9:30. We trade from 9:30 until 1:30, but mostly at 12:30, mostly out. After that, we're gonna trade again 4:30 to 7:8. Yes, so you can see that this candle right here, so it was our what, our 9:30 candle, right? So as I said, it's gonna make sense what, as we day trade, it's gonna make sense when we go down, right? So you can see that in our 9:30, the market was where, was at a area again of a demand zone, right? So it was at a demand zone. So this area right here, it was where price was once negotiated. So when price was here Tuesday on the 15th of April, it was negotiated. Sellers were trying to enter at the price to push, they were trying to enter this market to push it down, but buyers said, okay, you know what, we feel that we can still buy this market to push it where, to the upside. So we're saying we are still willing to buy this market. So buyers entered and they pushed this market where, to the upside. And then we saw when the market at 9:30, or when this candle closed at 9:30, basically activating our time of entry, it was where, it was at an area that was previously negotiated, and we got a conclusion. A conclusion here was what, it was that buyers dominated that area. So that territory right now belongs to buyers, because sellers tried to enter this market and they tried to push it where, to the downside, but buyers sort of step into this market and said, we are taking control where the market is at right now, and we're going to push this market to the upside, right? So we can see that at 9:30 the market was there. So we understand that we are at the buyer territory, right? Because sellers were in that territory and they lost it, buyers dominated that territory, right? So we can see that this market, we still wanted to go where, to our previous high, right? But we can see that we have, for the day, we have this high over here, which is our high of interest for the what, for the day, right? Because this is where the market rejected, right? Despite our previous weekly higher low, you see, despite this area, this is our weekly perspective, this is our weekly analysis, right? So if market is surely a previous weekly high by the end of today, tomorrow, then meaning that, what is the day today, is it Tuesday, Wednesday, I don't know, it's Wednesday. Yeah, if it hit it today or Thursday, then it means that for the week we're done, right? So that is the overall, that is the big structure that you must put in mind. But for the day, because we day trading, right, we put what, we put our candlesticks in mind, especially mostly we put our 4 hour, our daily, right? We use those reverse, those pullbacks to put our target, right, sort of here. So we see that the market was here, right? So we can see that on the 4 hour we have this sort of high rejection, because the market opened here and then buyers tried to push what, they tried to push this market where, to the upside, but they failed, right? So I'm not gonna write higher lows, I'm just gonna make it blue. So you guys gonna see that this area right here, okay, let me just write higher low, because it's on a 4 hour and we are day traders, so mostly on 1 hour, right? Yes. So also again have this, so these area right here, we like to use them as our target areas, right? As our target areas for the day, right? Yes. So we have higher low again, right? Yeah, so we have higher low again, right? So we go over to what, to our to our 1 hour, right? Because we can see that we at the monthly, we at the 4 hour demand zone, right, over here, demand zone, right? So we're at the 4 hour demand zone, right? So we can see that we're at the 4 hour demand zone, and then we can see that the time is what, the time was rather half, but this was a 7:30 candle, so we closed around 8:30, right? So we wouldn't have waited for this candle of a 1 hour, we wouldn't have waited for a 1 hour to close. So because of the size of the demand zone, is not a big demand zone, right? It's a small demand zone, so would have basically waited for like the 15 minutes. That's like the lowest time frame would have waited for the candlestick, because the 1 hour would sort of give us something like this. The reason why I don't like 1 hour is because sometimes you find that the 1 hour candle, let me close that thing. You might find that the 1 hour candle has already hits touch here, and then it move all the way to here, maybe it closes around here, and then now you have a lot to lose, right? The trades 10 to 1 to 1, right? But if you head over to our 15 minutes, we can see that on our 15 minutes we're waiting for what, any bullish momentum to enter in this zone, then we enter, right? We enter where, to the upside, because we understand that we're at the buyer's territory, right? Our buyers here once dominated. We can see in this move that buyers here took the price to the upside, so we're basically back at our buyer's zone, so we're at buyer's territory. So we're saying buyers are more likely to push this market to the upside, right? So after this 15 minutes candle, this would have been our entry for the day, and we didn't take this entry, by the way. We didn't take this entry. We didn't take this entry. We didn't take this entry. Today I was busy. That's why I'm even uploading now. I thought I could take Sene because I woke up around 2, as I said. I thought that after around 2, around 6, I'm gonna be free and I'm gonna start being on the chart. But unfortunately, I ended up being busy up until today. But you can see that this trade is still running. This trade is still running. This trade is still running. So it would have been a would have waited for something like a continuation pattern somewhere here to enter this trade again, 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 this trade again. It will just break for in a height, and then it must come back to this one right over here. There's one right over here, and then if this market right over here breaks right above here and come back to retest here, and then it shows sign of a 15 minute bullish candle above this height resistance, then I'm willing to take that risk. We can still ride this trade because it is not far from our entry, but acknowledging that the market is already high, right? The market is already high, right? But at this zone is not a good area for us to enter. We have to wait for a bullish what? For a bullish reaction. For a bullish reaction. For a bullish reaction. For a bullish reaction to the upside. So as I said, when the market break there, we go over to the upside. Let me fix this thing. I don't know why I haven't, or the reason why now it's such a process for me is because I forgot to click these things. That was my favorite after I was showing you guys how to install Fibonacci. After I was teaching you guys how to install Fibonacci, right? Guys, I have such a big hands. I have such big hands. Yes. So I can enter something like this, stop all the way to the downside, right over there, if the market breaks to the upside. But overall, this trade we just gonna watch. But if the market comes back again at this area, and then we enter to the upside, right? So that is my overall analysis on DXY and the daily trade that today we didn't enter, and what we are still waiting to see as we're still about to approach. Oh, wait, fast forward right now. Let me check the 4-hour closure, how the candlestick of the 4-hour market closed, right? Let me check. Okay, tough past 5. So we still, so I usually, sometimes I get this inverse, right? The reason why is because of that thing that the time in the market usually changes, right? With seasons. Yes, with seasons. Yes. Yeah. So yeah, this is it for the day. This is what we're waiting for. So today, the reason why I'm not gonna analyze on WhatsApp. I'm not gonna analyze the video of Fibonacci alone and Fibonacci on not using demonstrating an example of Fibonacci on live trade. I'm not gonna use that because why? Today the entry that we got was not mostly okay. We used Fibonacci, but it was not directly at the Fibonacci area. If you can check that, for example, here we're way far away from this Fibonacci right over here, right? We are here, right? And the reason why we took this entry, right, is because why at this zone buyers sort of show a previous dominance of this area, right? So that's why we used basically this candle, and we saw that okay, you know what, this it was once bearish sellers once were coming in the market, right? But buyers took control where and pushed the price to the upside. So we are entering because we see that the price has reacted what to the 50% move of this move right over here, of this move, right? So in a 50% discount, 50% discount, I even made an example of that microwave, right? That when a microwave, it was 2000, and then now they're saying this microwave is 1000, but it's gonna go back to 2000. So you can sell it where, because you know that okay, from here, from this area right over here, from this area here to here to here, this microwave is 2000, and then now it's here on the 50% at 1000. So you can buy it here on 50% and push price where to the upside and sell it there on the upside, on sell it there when it's 2000 again, right? So I don't know if I'm making sense, but yeah, something like that. So this trade was not promoted basically by Fibonacci alone. It was Fibonacci and then showing you that it was Fibonacci demand zone and how you can catch incomplete move, right? Because this is move, it still needs to be completed, right? By what? By a touch of this previous weekly high, right? So right now it's still incomplete. So right now we're basically trying to push price where to the previous weekly high, to the 100% what of this move right over here. Yep, that's it. Yeah, that's it. But fade 2.